Okay, welcome back. The pre-open rates starting to come up on your screen, and I think as the SGX was indicating, it's going to be a higher start. That much we know. Rajesh Balvia is Vice President Technical Derivative Research at Axis Securities. Rajesh, good to have you with us here. So if you get a 50, 60 point kind of a gap up, what should one do? Run after it, chase the move higher, or wait and watch, at least for the first couple hours?
Good morning, Prashant. So, previous day recovery was very significant for the market because we have holded this 18,200 put base concentration, and market is now almost trading near to 18,400. So, looking at the near-term scenario, we expect that 18,300 to 18,500 could be the possible range we can see in the next one or two trading session. Just to play this move, we are here, advising here to initiate bull call spread. In this spread, you can buy 18,400 call option at 60 rupees, and on the other end, you can sell 18,500 call option at 25 rupees. So your net outflow would be around 35 rupees, and we are expecting that the kind of pullback we have seen in the previous session can extend further. Though 18,500, 18,550 is likely to act as a resistance for this weekly expiry. So play this move. We are advising here bull call spread 18,400.
Okay, I think we lost that frame. We'll try and have that back with Rajesh in just a bit. Do we have Rajesh back? Okay, Rajesh is back. Rajesh, go on. Go on. Rajesh,
So
go on.
we expect, this pullback can continue. And 18,500, 550 zone, we can see in next one or two trading session.
Okay. What would your individual trades be, Rajesh?
So looking at the stock specific, we are bullish on Bharat Forge, strong setup and kind of buying action we have seen in the previous session. Bharat Forge can move up 920, 930 could be the possible target. One can keep a stop loss of 885. Another stock is from housing finance sector, that is LIC Housing Finance. Since last two trading sessions, strong buying action has been seen. So LIC Housing Finance can be buy with stop loss of 405. Upside target is 430.35. Third stock is Cummins India. So Cummins India, one can buy for upside target of 1530, 1540. One can place a stop loss at around 1460.
All right, fair enough, Rajesh. Thank you very much for that. Good speaking with you. Those are some individual names. And on the Nifty, eventually 18 to 500 or so is coming. Now, on Market Laser today, I'm going to present a chart. This is DLF I'm going to talk about. And, it's not just DLF. The chart will tell you the story. A lot of stocks are showing similar kind of price patterns. Most of them are, not most, but I sort of went through the well-traded liquid F&O names. And let's have the chart up, please. DLF is at an important trend line. And as I said, it's not just DLF, but it is a lot of other names as well. Do we have the chart? Okay, I think what we'll do is we'll just give it 2 seconds and then come back because I think we're having some difficulty in pulling that chart up. It'll make more sense once we have it. Just coming back to it. But I think, Sonia, we have a discussion on auto.
Oh, absolutely. There are almost 25 new launches coming up in 2023 from the big players, the Tatas, the Marutis, the M&Ms of the world. So there's plenty to talk about in the auto space. But of course, having said that, growth has moderated as well. So we have Vasudev Banerjee, who's joining in. He tracks
Sonia, just 1 minute. Sorry, I'm being told that they managed to pull that chart
up.
Sorry.
Go ahead.
Vasudev, sorry for the flip-flop. I know you can hear us. Just coming to you. If you can have that chart up, the DLF chart, this is what we are doing. This is the simple trend line from the lows of June. I mean, the first touch point is the 20th of June levels, which was 294. Then, I mean, we came very close in the month of September 2022 this year to touching those levels, never quite did. There was a touch point exactly on this trend line on the 17th of October 2022. That was at 351. So first in June, that is 294. Then in October, that is at 351. And then finally, yesterday, the DLF price broke through this level, as you can see, and it pulled back, ending about 3-4 rupees. There was a clean break through this level, and then it kind of pulled back and ended slightly above that level. So I would say this qualifies as something that you'd want to watch. In any case, these levels around 380, 390, 395, this becomes crucial. If this is held, like in the past, maybe it gives you a bit of a bounce. If this is broken, it perhaps opens up downsides. Mitesh, I think, is still with us. Mitesh, I don't know if you can see the chart, but if you can, or if you pull this up on your screen, any thoughts? DLF?
I think you've drawn a trend line over there, which is an important level. But also consider that the indicator setup isn't very positive. So there could be a bounce back, and the stock might, travel to about levels of 405, 404. If there's failure at those levels, then I think the price will come back again and then try to break below the trend line. So I think the support level, the trend line is there, but the overall setup is not inspiring confidence of momentum on the upside. So to my understanding, I think this is a chart which can give a bounce back, but I think eventually might again come back and attempt one more chance to break below this level.
All right. Thank you very much, Mitesh, for that. So that's DLF. Keep an eye, keep under the radar. That's, the stock for today. But back to auto and those launches, Sonia.
Absolutely. I mean, it's going to be a big year. A lot of these companies are very aggressively upgrading their portfolios as well, their India portfolios. But there are almost 25 new launches in 2023 from the large players. The one that I'm closely watching is from the M&M stable, which will happen in the month of January. It's the XUV 400 electric vehicle that promises to be both at an attractive price point as well as, good on the road. So let's see. Basudev Banerjee, analyst at ICICI Securities, joins us now to talk about that. Basu, before we talk about the new launches, tell us about the stock prices, right? As we head into the new year, what do you see as the outlook for the auto sector? Which are the stocks that you recommend buying? Which are the ones that you would avoid?
Yeah, see, first half of the calendar year 22, the sector outperformed by around 22%. And in second half, it was more or less at par with the benchmark index. So going ahead, if you look at no more price hikes pending in a big way because of input cost material, though bit of RD norm-led price hike for diesel models will come in. But petrol prices on the weaker footing. So overall, TCO is not going to inflate in a big way. Interest rates moving up by 50, 100 basis points on this base for a 15, 20 lakh car doesn't pinch the pocket of the consumers much. So from that angle, from a 2-year perspective, our top pick in the space remains TVS Motors, followed by again, another beneficiary of premiumization in the auto space being Eicher Motors, Royal Enfield brand. And in the four-wheeler space, from a cyclicality perspective, my topic remains Ashok Leyland, where CV volumes are pretty much steady and benefit of raw material price coming down will seep through the numbers very soon. The rest from a M&M perspective, yes, very good launches. Good show in the UV space, tractors consolidating, but stock price moved up too fast. So yes, for last few months, M&M has been consolidating. Now is the turn for those promotional priced models to go out and proper pricing action for XUV 700 and Scorpio N to come through. So auto segment margin moving up should take M&M to the next level.
But from a valuation standpoint, I mean, M&M has had a great year. It's up almost 53%. Do you think there's limited upside from a valuation standpoint as well? How does it stack up with its peers?
Yes, see, peers-wise for M&M, no proper peer as such. So there's no point in comparing Maruti Suzuki's valuation with M&M. For M&M, it is more of on a SOTP basis where the other listed subs, tractor business recovering back and the auto segment margin moving up. So on a blended basis, M&M is trading somewhere around 18 times core business earnings FY24. So with auto segment margin moving up, overall cash flow visibility improving, monetization of assets through further stake sale in EV segment down the line, and rolling over to fiscal 25 earnings. So these will be the triggers for M&M's price to move up in next 12 months per se.
I also wanted your thoughts on what's happening with Hero Moto, because, you know, over there are a lot of there's a lot of commentary on how perhaps the company is just unable to regain its lost market share. There are some leadership issues as well. The stock has done nothing for investors. I mean, 4 years back, Hero Motor was at 3,000 rupees. Today it's at, 2780 or so. Do you think fortunes can turn or fortunes can change for Hero?
Yeah, as you rightly said, if you look at two-wheeler markets have declined 35% between FY 2021-22. 35% is not a small number. First half of that was impacted by COVID, and second half of that period has been impacted by weak rural consumer discretionary demand. So now for last 4 months, September, October, November, December, if I look at overall pan-India retail numbers, there's a huge divergence between retail and wholesale. Earlier, pre-festive season, retails used to be 2.5 lakh units a week. And now, post-festive season, even in the month of November, December, retail units are like 3 lakh units plus a week. So almost 20% better. And you can see the numbers published on 1st of the month that October was 30% lower than September, and November was 30% lower than October. So which implies a huge quantum of destocking activities going on, which I suppose will happen in December also. So from that perspective, with this level of retail consumer sentiment gradually recovering in rurals, so from next calendar year onwards, I won't be surprised that on a benign base, wholesale start picking up for the mass market two-wheelers, and Hero is the leader in the mass market segment. And as you said, market share overall did not go anywhere for Hero, or it was on the downward bias. That is because Hero is primarily a rural-centric play. And in last 18 months, rural markets have been quite subdued, where urban-centric plays have done relatively better.
All right, we'll leave it at that. For Hero, there is additional issues, right? The recent resignations that have taken place from the company. There is some shakiness as far as the top leadership is concerned, and that doesn't bode too well for the stock either. Basu, thanks a lot for joining in and giving us an update on the auto space and how to approach it. Well, let's get some quick calls in. At 9:10 this morning, the market is trending higher. It's up almost about 0.5%, for 50 points now in the Nifty. Sensex up 300 points. Mitesh, what would you do at this juncture if the market does open with this gap up? Then what's the top call at 9:10?
See, I think I'll go with a buy on Apollo Tyres with a stop at 322 for targets at 340.
Mitesh, I just want your thoughts on these names. So there's a newspaper report which says that Indian companies are paying up to 25% more for APIs, right? These are building blocks for drugs. That's up to 25% price rise in APIs coming out of China. IIFL is highlighting that this is a risk of downgrades for companies. Let's have these charts up. Risk of downgrades, margin downgrades for companies like IPCA, Alchem, Alembic. IPCA, Alchem and Alembic. They're saying that they were building 200 to 300 basis point improvement in margins for these companies. And this comes under a bit of a risk now. Any of these names, Mitesh, in terms of how they're looking, IPCA, Alchem or Alembic?
See, I haven't been tracking the other ones, but IPCA is on my radar. IPCA, I think if you look at last nearly about 7 months of price history, Prashant, I think on multiple times, 850, 840 level is held down. I think if it starts getting past 880, there will be a reversal. But if it breaks 840, 850, then I think we're looking for a stronger decline happening.
Okay, thanks a lot for that. Let's get you some quick stocks that are buzzing around today. City Union Bank is top of mind. Abhishek is here to tell us more. Abhishek.
Well, Sonia, as you mentioned, City Union Bank is in focus given the fact that they have reported a gross NPA divergence for the FY22 number. So it's around 260 crores, which forms about 20.3% of the FY22 slippages and more than 13% of FY22 in terms of gross NPA. So provision divergence is just 40 crore. It may not impact the PNL going ahead. However, analysts are worried that, this slippages can cause a spike in gross NPA ratio, as well as the fact that management has now lowered their guidance in terms of the loan growth. So this could impact the stock in trade today. Back to you.
All right. Thanks a lot for that. We just have about 15 seconds before the market opens for the day. And in all likelihood, it will open with a green tick about 50 points higher on the Nifty, led largely by financials. So you have Bajaj Finance, Kotak Mahindra Bank, IndusInd Bank that are in the green. A lot of IT companies come out with their earnings in the first 15 days of January. So ahead of that, you have Infosys, HCL Tech that are trending about 0.5% higher, not too much. And then there's HUL, Eicher Motors, Tata Motors that are just trending in the green as well. Let's see. The first tick is not bad, as expected, 53 points higher for the Nifty. The Sensex is up 180 points. The Bank Nifty is charging ahead with almost a 200-point gain now. And the mid-cap index is also faring well this morning, up almost 150-odd points. The market breadth is very favourable towards advances. So 6:1 in favour of the advances. And the top honours go to Tata Motors this morning, up almost 1%. Hindalco up 1%. HDFC Life, Tata Steel, and a lot of the IT names, Tech Mahindra, Infosys, are well in the green right now. HDFC Bank is well holding up. You have Bajaj Finserv, that's up 0.7%. Apollo Hospital, Cipla, a couple of these pharmaceutical names are doing well. Most Nifty stocks are in the green, barring a Power Grid, a Dr. Reddy's, Bharti Airtel and HUL. That too just a smidge really. It's a good opening for the market, no two ways about that. A lot of stocks in the news which Nigel will discuss, like Dixon Tech and Uno Minda. But for now, a lot of companies like Axis Bank hitting fresh 52-week highs. So talking about fresh highs, Adani Enterprises, Axis Bank, Apollo Tyres are all sitting at fresh highs this morning. Something like Specialty Restaurants as well at a fresh 52-week high. So good opening for the market, 70 points higher now.
All right, well, let's focus on a couple of those names then from the broader market. Shyam Metallics have done an inorganic growth. For starters, the stock is up, I think, close to around 4% odd. Volume's not very, very large, but it's holding with a gain of around 4.5%. In the next 90 minutes or so, we'll try to get the management on the channel and give us further details on this. For stainless steel pipes as well as tube producers, well, there is protection that's coming in there. It was recommended in September and now it will be implemented. So Venus Pipes as well as Ratnamani Metals, both of them, they make stainless steel pipes. So they, in fact, get some protection. Let's pull up both those two stocks. Maybe we can chip in with the Jindal SAW as well to see there's a bit of a positive reaction. But some part of the street was expecting this because it was recommended in the month of September itself. Both those two stocks have opened up in the green. For Jindal Stainless, well, they don't make pipes, but they could be an indirect beneficiary. If these guys are going to be making a higher amount of tubes and pipes, then it'll be an indirect beneficiary out there. On the flip side, you have City Union Bank. The gross NPA divergence is what they have reported for the month of, for FY22. Analysts also seeing a bit of a risk now. They could possibly miss their loan growth guidance. So on the back of that, that stock is down by close to around 7% or thereabouts. Sterling and Wilson, well, Vivek told us that there's strong demand being seen for the OFS. So let's pull up that stock. And Dabur as well, well, they say that they're not going to be selling more. Manglam had told us that yesterday as well. Let's see whether or not we're seeing a bit of a pullback. To be fair, if from lows of yesterday, we saw close to around 2% pullback in trade. What else, Prashant?
Nigel, City Union Bank is down a full 8% now, 174. So that's a large cut that we are looking at as far as City Union Bank goes. Punjab and Sindh Bank is another one which is down about 2.6%. Max Financial Services is coming up with, is there a block? I think there is a large block which has happened on Max Financial. We'll put up the data. But because the volumes are just, completely off the charts, it's down just 1%. But Max has, I think, seen a block deal, the details of which we will put out. The other one is Just Dial. 2% equity has changed hands. Yeah, there you go. So that is at about 692, 693 on Max Financial. More on this one in terms of, that's a large one, 2% equity. And we'll have more details on that one a little later. Just Dial is down about 1.33%. Again, humongous volumes for this point in the day for a stock like Just Dial. Bharti is down a quarter, nothing much actually. Then you have these names. National Fertilizers, NFL is down 1.33%. GIC-RE has seen a some 14-15% move last few days. That is coming up a little lower. Indigo is starting about 0.25% down. So soft, largely. 5:1 is the advances to declines ratio in favor of advances. So let me just look at a few names on the upside as well. Look at Lal Pathlabs. 5.5% higher on Lal Pathlabs, if you can have that up. That's 24.09 on Lal Pathlabs with a humongous move right out of the gates. Fact, a small fertilizer company, 5% high. I don't know if the limit has been, the daily circuit has been changed. I think it was up 10% yesterday. Okay, no, it's 5.33% higher. So that's trading through that 5% limit. UCO is up about 3%, 3.25%. Bank of India. So, after a 7-8% pullback in the PSU Bank Index, are these names starting to come back into rotation too early, but just mentioning what we're seeing. Manappuram is another one. Actually, I saw Muthoot also higher, and Manappuram is up another 3.25%, 3.33%. Sugar was all doing well last 2 or 3 days. Look at Dhampur Sugar, which is up 4%. And when this moves, it moves as a pack. Bajaj Hindustan is up 5%. What else? Dalmia Sugar is up 4%, 4.25%. So sugar is clearly a strong theme that we are spotting. I mentioned Lal Path Labs. There is Metropolis also, which is looking up by about 3% or so. 1318 on Metropolis. It's also coming off. It's also bouncing off an important support level. It's done extremely poorly, Metropolis. So that is another one to keep on the radar. For now, we've got, 85 points on the Nifty with a pretty strong kind of start at this stage. Well, Sanjeev Prasad is the Market Master of the Day, Managing Director and Co-Head, Kodak Institutional Equities. Sanjeev, great to have you with us here. Thank you very much for your time. You're calling for some consolidation, right? So the market spends some time digesting all that it has done in 2022, one of which, of course, is pulling valuations also, in some cases, way above last 10-year, 15-year averages. Go on.
Yeah, true. See, the market hasn't done much in 2022 also. So last 15 months, if you take, let's say, from September end of 2021, it's been pretty much in that 18,000 plus minus range only, barring a bigger correction in May and June. People are obviously very worried about high inflation and high interest rates and so on and so forth. So market is, as of now, in a consolidation phase. Valuations are rich. And the second thing which we have to figure out is, how long do the central banks, including the RBI, hold interest rates? So as of now, we're getting some comfort on the fact that inflation seems to have peaked in some countries, peaking in others. So hopefully, as far as the actual central banks are concerned, we are probably reaching terminal or peak rates as far as the current monetary cycle is concerned. Look at specifically for India, policy rate 6.25 can head to 6.5, but hopefully that's about it. Barring any negative surprises on inflation linked to food or fuel going forward. A bigger question is how long do central banks hold rates now once they take it up to whatever is the peak levels for the major economies that matter. And that's where the debate is going to be over the next few months between the market and the central bank. Obviously the market would like a quick pivot from central banks. As of now, all the indications from central banks is that they're going to hold interest rates for a longish period of time. And I guess that's probably going to be the case given two factors. One is central banks obviously want to maintain credibility given the fact they lost some of it in the run-up in inflation and they were caught napping. So this time around, they would want to see inflation actually coming off significantly. And more importantly, core inflation starting to come off. If you look at the data for core inflation in most countries, it's still very high and not coming down. So that's the other thing which we want to see, whether you are starting to see some demand destruction, particularly the US, which would result in weaker bargaining power as far as the employees and wages, etc., is concerned. So those are two things which I have to wait for. I think market has already factored in the fact that we are at peak inflation and interest rates. But what is probably not factored in Indian valuation, at least, is the fact that interest rate could sustain at a high rate for a longer period of time. So obviously, consolidation would hopefully result in earnings numbers. As we roll over earning numbers, the valuation is starting to look more reasonable, at least for the growth/quality part of the market.
Just wanted to bring your attention to a lot of these diagnostic stocks. Of course, we mentioned them briefly, but they are in focus. Metropolis as well as Dr. Lal Path Labs, as because of the COVID scare globally, the Union Health Minister will be chairing a high-level meeting today, as cases have jumped globally. And earlier in the day, the Health Ministry wrote to several states and union territories to ramp up genome sequencing to detect any new variants of COVID. So it's unfortunate that it's happening again, but of course it means more business perhaps for a lot of these diagnostic companies. Sanjeev, this is another overarching worry, right? With what's happening in China as the COVID cases are rising, there's going to be several ramifications on global markets, whether it's on manufacturing, whether it's supply chain constraints. Now, of course, what's happening with ramping up on the health side. What do you do here? How do you A, play this theme as an investor, and B, do you raise your cash levels just fearing that there could be some pullout because of this?
So, China obviously will have to wait and see what eventually transpires over there. So currently, the market is looking at a reopening. But obviously, number of cases have gone up quite significantly. So I don't know what response should we expect from the Chinese government now. So they seem to be starting to relax the controls on COVID. Number of cases are going up. So I don't know whether you see a swifter response in the form of lockdowns once again and so on and so forth, which have obviously, as you rightly said, a lot of negative implications for manufacturing and global good inflation and so on and so forth. It's really confusing, to be honest with you, because these things are so diametrically opposite. Reopening versus lockdowns. Implications are so 180-degree apart, right? So I don't know what to really make out of this whole COVID scare in China for the time being. If you take a longer-term view, and obviously China has been preparing for reopening in the sense trying to ramp up vaccinations for the more vulnerable sections of the population, increase the number of hospital facilities and intensive care units and so on and so forth. Now, whether that is sufficient for the Chinese government to be comfortable about continuing the reopening policy, we'll have to wait and see. So this volatility will continue in terms of the news flow to China. And as I said earlier, the implications are pretty much 180-degree apart from reopening to, in a way, closing once again. So honestly, I don't know whether we can do much in terms of, trying to, put in any coherent strategy in response to whatever is happening in China currently.
All right. Hi, Sanjeev. Good morning. Sanjeev, on PSU banks, investors who have got in at the right time, well, they are in a bit of an issue because they are wondering whether or not they should book out. And the other side is valuations are still a little bit comfortable. What's your sense on the PSU banking index? Is the best behind them in terms of getting in, or do you think they still give you some kind of cushion on valuations so you can still get in?
Yeah, so I think valuations are still pretty reasonable for most of the PSU banks. If you look at, let's say, something like Canara or a Union Bank, they are still at about 0.8 times March 24 price to book, and their ROE at least over the next 2 years will actually go back to 13 to 15% level. So at least one time book you can argue on a more short-term basis. Obviously, investors who have a sort of a medium-term memory of PSU banks obviously are not going to be comfortable with many valuations which are above one time price to book. So that's probably what you hope for. Some relating to one is possible in the context of the fact that at least over the next 2 years, you are not going to see any challenges on credit cost. Credit growth is recovering. So if I put those two together, I don't see too much negative news out there. Also, PSU banks are fairly comfortable on credit deposit ratio and all that stuff. So I don't see too much of an issue as far as NIM is concerned for some of the PSU banks also. So all put together, I think people who are invested in can stay invested. And obviously, these banks will also generate some, profits in terms of, book value will also increase over time, given the fact that they're finally generating, some reasonable amount of ROE, 15%, whatever is the compounding that you are seeing on the book. So if you put, some growth in the book itself over the next 1.5 to 2 years, plus some possible rating, I think it's a decent rate to be in.
Yeah, no, absolutely. Sanjeev, as we get into 23 do you think the focus and maybe money will perhaps be made in underperforming sectors? Basically IT and pharma, which are the two large sectors which have done very, very badly. What's your sense?
Seems tricky on current form, given the fact that at least Europe is going through a massive slowdown and probably will get into a recession also. If you look at the US, I suspect the central bank over there, that is the US Fed, will probably continue to have a fairly tight monetary policy, at least for the next 9 months or so, which means they will probably like to engineer a slowdown and, if not an outright recession, to bring down, core inflation and break the bargaining power of employees over there. So basically, that means you need to see an increase in unemployment levels, which are currently at 3.7%. If you look at the non-farm payroll addition in the US, that is still very, very strong at about 250,000 plus last couple of months. So clearly, we're not gone to a stage where US is starting to feel the effects of the higher interest rates and so on and so forth, which means the central bank will have no option but to keep interest rates higher for a longer period of time to actually break down inflation expectation and particularly core inflation. So in that context, I would assume if you're looking at a slowdown in the US posed by the actual central banks, I suspect IT demand is not going to be strong, particularly the discretionary part of demand from customers. Pharma, honestly, you have to look at the more bottom-up basis. They have their own challenges. Many of them, US generic pricing, clearly there is no pricing power. You can make some money as long as you have a new product launch for it, and you have some exclusivity around it, but that's about it. So, the stocks which we like in the pharma sector are more the domestic oriented stocks, because you are seeing decent amount of growth over there. Most of the, at least the domestic part of the pharma company, that seems to be growing at about 11%, which is actually quite decent, and that's probably the business which we are much more excited about currently.
Okay, all right. Thank you so much, Sanjeev, for stopping by and giving us a view on the markets. Wishing you a good festive season. That's the end of 2022. And looking forward to having a chat with you in 2023 as well.
Bye.
Well, time to move on then. We have Mr. Rajiv Lokchan, the MD of Sundaram Finance, who is standing by to run us through how business outlook is shaping up, as well as how is he reading the current scenario. Hi, sir. Morning. Thanks so much for joining in. Well, good speaking to you as always. First up, if you could tell us, how are things shaping up on ground, Rajiv? Are you seeing good amount of demand? Give us a sense in terms of how are dispersals ramping up as well, and traction from the CV space in particular.
Good morning, Nigel. Thanks for having us on the show. I think the last couple of quarters have been quite strong as we've recovered from the down cycles of the commercial vehicle space in general, but broader automotive space has been through a patchy sort of 4 quarters. But last 2 quarters have been quite robust. Looking ahead, though, I think there are a number of macroeconomic factors and geopolitical factors that leave us somewhat delicately poised as an economy. And much of the discussion in the last half hour that you guys have had have shed light on many of the interrelated factors that are at play. Our sense is sort of inflation continues to remain, while it has come down, continues to remain an important metric for the policymakers, regulators, and the government to keep in mind. And so while it feels like we've reached a stage where we should expect slowing down or even pausing on rate hikes and monetary policy actions, there are a number of factors, including the most recent sort of China issue, both in terms of their macroeconomic slowdown, but also the COVID situation that you were just discussing, which does leave some pause in terms of what the macroeconomic activity could look like. The commercial vehicle space, as you know, is directly tied to economic sentiments. And I would say through the festival season this year, we've had a terrific movement in the CV sector. Post-festive, there's always a slowdown, and this year with Deepavali Dhanteras being in October, November has been somewhat slower than normal. But the December season in Andhra Pradesh, Telangana, which tends to be a bellwether for us, is somewhat muted. And so it feels like a lot of the buying is now still replacement buying, and we haven't seen as much expansion buying. That said, I think in Q4, we should expect both GST buying as well as price hikes that will come as a result of transition to the next phase of BS6 that will take effect April 1. That will result in some pre-buying. So we expect Q4 activity in the commercial vehicle space to pick up. With all that said, underlying demand and the ability to deploy the assets, to our mind, should be the basis on which sort of we support the growth. And so looking ahead, we have to be thoughtful in terms of how we balance growth versus asset quality versus profitability.
All right, Rajiv, good morning. Great to have you with us here as always. Prashant here. So you're saying that although it may seem like rate hikes are at a peak and maybe no more is required, one needs to be watchful because that's the single most important thing from a macro point of view and for commercial vehicle sales, etc. Just on that point on Andhra and Telangana, right? Could you explain that a little bit more? What's your exposure? How important are those states to Sundaram's business? And you're saying you're not seeing fresh buying as you would have seen because the festivals there. It's largely replacement demand. Could you put that into context? And also, if you can wrap that up with some numbers. I mean, when you say, so you're indicating slowdown, to what extent? Yes.
Yeah, so morning, Prashant. Andhra, Telangana are important markets, not just for Sundaram Finance, but I think for the CV manufacturing sector itself. fairly large sort of retail buyers in that segment. And December tends to be a season when the buying tends to peak in the Andhra Telangana markets. The last 3 years, both as a consequence of COVID as well as a slowdown in the CV segment that started in the second half of fiscal 20, the Andhra sort of December market has been somewhat muted. And so I think the sector as a whole, not just Sundaram Finance, was looking forward to sort of buoyant sentiments in December. Our read from the ground indicates that, while we expected the momentum through the festival season to continue, buyers are a lot more circumspect in terms of both the asset prices that have now reached and the viability of the asset itself. As you've known, the diesel prices, the crude prices have dropped in the last couple of months, but we haven't seen sort of the headline diesel prices move down. And so viability for many of these operators remains at the same level that it was when the crude was north of $100. That in turn sort of forces buyers to be a lot more circumspect before they make some of these large investments, particularly in the M&HCV segment where asset prices are now north of 40, 50 lakhs. And you buy a couple of vehicles and you're already in the 1 crore plus mark, which is a fairly substantial burden for retail commercial vehicle buyers. So that's a little bit of sense on the ground. I think we're probably expecting, I think December 2018 was sort of an all-time high in the Andhra market, and we were hoping we would get close to that level. Our sense is we're probably 3/4 of the way there is likely where we will end up, given what we're seeing on the market right now.
So what are you looking at in terms of AUM and disbursement growth, not just by the end of this year, but in FY24 as well?
Morning, Sonia.
Morning.
This year has been good to us as we've got back the sort of focus on growth. Given the COVID asset quality focus held up quite well, I think we moved our priorities much more towards growth. And we are on track to create a new high for us, just in terms of disbursement as well as AUM growth. But just given the uncertainties that we are seeing, both in terms of macroeconomic factors as well as geopolitical factors, it's hard for us to sort of put a number, so to speak, in terms of what we would like to do or what we will get to, both the rest of this year as well as fiscal 24. Our focus is very much on protecting and extending our market share across key asset classes and across the key geographies that we operate in. Right now, as I said, we are on track to establish a new high in terms of both disbursements as well as assets under management for this year. Our expectation is probably sort of double-digit AUM growth this year. And hopefully we will replicate that next year as well, depending on how the external environment plays out. Our focus is very much on holding our market share and extending it.
All right. So Rajiv, double-digit AUM growth is what you're targeting at this year. I think most on the street as well are expecting you to do anything between 11 to around 13% or thereabouts is what I've just read up. But you mentioned briefly about market share, and that's a focus area for you. Could you give us a couple of numbers in your focus areas? What is your market share, and where do you see that headed? And given that we are in a rising interest rate scenario, how do you see your NIM shape up going ahead?
Yeah, so market share, Nigel, sort of varies asset class-wise, geography-wise. So in the southern markets, in the commercial vehicle space more broadly, we've been in the high double-digit levels historically, and we'd like to hold that level. On the retail end of the commercial vehicle space, we'd like to get to double digits this year. And that gives you a sense for, the market share objectives that we have. In terms of construction equipment, we already have a double-digit share. We'd like to hold that and extend it, given sort of the push in infrastructure and construction that the government has. And the other important asset class for us is tractor and farm equipment. And that's been a little bit of a positive. After 2 or 3 quarters of relatively muted sentiment in the rural space, we are beginning to see some green shoots. The October-November season in tractors has been quite strong. We'd like to get to extend our lead there. 5-7% market share in the tractor space is what we'd like to get to. So that's a little bit on the market share front. On the other question that you asked on NIMs, our sense is we're getting back to sort of pre-COVID levels in terms of NIMs as a sector. I think over the last couple of years, given the surplus liquidity, as well as the accommodation that the regulator has given, we've, as a sector, enjoyed historic lows in terms of cost of borrowings and therefore historic highs in terms of margins and spreads. For the system as a whole, we should all expect sort of a reversion of margins and spreads to pre-COVID levels. The repo rate is now back at 6.25, which is roughly where it was pre-COVID. There's been significant competitive intensity across multiple asset classes, given again liquidity position that banks have enjoyed. That again, as deposit rates move up, will rationalize and normalize. So our sense is NIMs will get back to pre-COVID levels for the system, and that's what we are working towards as well.
Can you put a number to it? The NIMs, the rough range that you're talking about?
So if you look back historically, we've operated in the 4.25 to 4.75% NIM range, and that's what we should expect in the long term. Over the last couple of years, we've operated north of those levels, and that I think is entirely a consequence of the sort of pandemic accommodation that we enjoyed. We should expect to move back into that range over the medium term.
Okay, so 4.25 to 4.75 range is what you're looking to move back to. Your margins currently are above 5%. So you're saying that margins could fall in the medium term.
Sonia, as rates increase, competitive intensity increases, and the share of medium and heavy commercial vehicles comes back. The last couple of years, we've had higher yielding assets dominate the mix for us. But as M&HCV comes back, that typically is a more competed asset class, and the margins there tend to be compressed. So as that asset mix plays out, we should expect both as a consequence of cost of borrowing as well as asset mix to move back to that 4.75% level.
No, the reason I ask is also because you did mention briefly that you are looking at higher sales even from the tractor segment. But over there you have, M&M that has a large chunk of the market. The tractor sales for them have been hitting record high. So is there a lot of competition amidst all this growth? And is that why you may have to perhaps sacrifice a bit on margins?
Competition is definitely one important driver, Sonia, particularly as corporate credit has been somewhat muted over the last 4 quarters, or 6 quarters, I would say, as corporates have deleveraged. I think banks have moved much more, and we are seeing that in sort of retail lending growth that banks have recorded. A natural consequence of banks entering multiple asset classes and geographies in a much more focused way means that pricing comes under pressure. So that's one important driver. But also cost of borrowing transmits relatively quickly to the NBFC sector, and our ability to pass on or transmit that cost of borrowing increase is somewhat constrained given the competitive intensity. So I'd say both as a consequence of cost of borrowing moving up on the back of interest rate hikes, as well as the competitive pressures, we should expect margins to come back. As I said, it will move back for the system as a whole to pre-COVID levels, and that's what I think we should all expect.
Rajiv, it's a pleasure speaking with you, and that's a solid outlook coming from you. And just there are those who say it as they see it, and Sundaram has certainly been one of them. Always. Thank you very much. Great to have you with us here. Look at the market on the Nifty, which has come off sharply. I mean, we got about 30 points left now on the index. That's what, 0.16%. The day's high was made at 18,473. And we are about, 60 points off from the day's high. But this is the first move, right? I mean, if the last so many sessions are anything to go by, this is the first act in, maybe 7 or 8 acts that we will see through the course of the day. But for now, there is a little bit of cool off, which we've seen, 18,400. Just a few names before we kind of welcome in our next management. We'll have to take a break as well. But you put up UTI AMC. We didn't mention this earlier. UTI AMC, of course, has done well for 3 days now. And the trigger has been the report that Tatas are interested in buying UTI AMC. So today it's come up 3.25% higher. The Pathlab companies, both Lal Pathlabs and Metropolis, have cooled off a bit, but they're still higher. And the sugar companies are also still in contention. PSU banks, I mentioned this earlier, they are making a comeback. There was a big 7-8% cool off. We'd highlighted the PSU bank space and how valuations perhaps were running ahead of themselves early last week. From that point, 7-8% cool off in PSU banks, but there is money which perhaps is moving back into that space now. 4,400 in the index, and names like IOB, Bank of India, Union Bank, Central Bank. There are 5-6% kind of moves on most of these names now. 20 points on the Nifty, cool off on the index, but broader markets, market breadth, etc., doing very well. Sanjeev Asthana, CEO of Patanjali Foods, will be with us next to talk about their business and the entry of Reliance's FMCG brand Independence and how it can affect the business for them and for the sector. Stay with us. Later, we'll also connect with Neeraja Kapoor of New India Assurance, one of the first ever interactions with the management of New India to discuss IRDAI's measures to boost sector penetration, new norms, all of that. Back in 2.